days VIP course. Today is day 4 of our 7 days VIP course. For those of you who were able to make it into this VIP course, congratulations. I want to believe that we've been learning a lot. Okay, this is the material we're using baby pips. So quickly, let's look at where we stopped. We're supposed to look a little bit of crypto. We've been talking on Forex since we started this course. Okay, so we are still on margin trading 101. We're supposed to finish margin trading for this VIP course. So by the time we are done with margin trading, we'll look at crypto trading briefly. A few things on crypto before we round up the VIP course. I want to believe that the screen is being shared. Okay, I got your message on the group. Easy FX. Thank you for that feedback. So yesterday I looked at a few things. We stopped at, I think here we stopped at stop at level. So should, in case you missed the class for yesterday, we already have the video now. We have a beautiful website that has been created for you. This website is to make Forex and crypto trading easy for you, so for you to easily learn. You know, we have ebooks, we have a couple of videos there as well, and then we have the VIP videos too. So the subscription payments platform is still under processing. As soon as that is concluded, that will be important for new students. So for new students to get enrolled, they will need to pay through such subscription means. So but for those who are already subscribed, your subscription is on already for a period of 12 months. Okay, so I don't know, where did I go to now? So back to trading material. I want to see where we stopped. Okay, this was sorry, please, I've pressed something. I think my mouse has touched one of those ads on the website, so I'm trying to go back. Okay, now to get registered on website is very easy. I'm wondering why at this beginning stage someone is already having forget password issues. Maybe you made it there, but getting registered at this level, I think it's easy. The form is very simple. I made it very simple so that anybody knows. So this was where we stopped yesterday. What is stop out level? What is stop out level? We looked at it till the end, and then today we're going to be looking at trading scenario, margin call level at 100% and no separate stop at level. All those are big grammars. Stop at level, margin call is when your account has exceeded the necessary margin requirements and is about to be blown. Okay, so let's now look at how we can use all the jargons like described in this material. So different retail forex broker and CFD provides margin call policies. So it depends on the broker you're using. Every broker has his own margin call policies. Some only operate margin call, while some operate. Okay, so depends on the broker's policy. So the broker defines it as margin call level at 100% and has no separate stop out levels. So let's look at these simple illustration. Deposit funds into trading accounts. So whatever is deposited is, let's take for instance, is $1,000. Now look at this, look at the informations you will definitely see sometimes: long, short, FX pair, position size, entry, current, margin level, equity, used margin, free margin, imbalance. So floating P or L, that's profit or loss, is 0, used margin is 0, margin call or margin level is 0, because no position has been opened on that account. So let's look at step 2. So for step 2, it says you want to go long on this at this price and want to open 1 mini lot, which is 10,000 units. The margin requirement, of course, you know, is 2% for Euro USD, as I taught you in the earlier classes. How much margin required will you need to open the position? Since Euro is a base currency, this mini lot is this, which means the position notional value is this. Since our trading account is denominated in dollar, we need to convert the value of the Euro USD to determine the notional value. So let's convert it and say, so this is the conversion rate for 1 euro. You know, euro is bigger than dollar, so it's 1.15 for 1 euro. So automatically that means for dollar it should be 11.5. So the notional value in dollar is 11.5. Remember, we're dealing with Euro USD, so the conversion is changed back to dollar since dollar is the base currency. Now, to calculate the required margin, you multiply the notional value by the margin requirement. So remember, margin requirement is 2%. So is that 2%? 2% is also equivalent to 2 over 100. So that's what gives you 0.02. That's what you can see here. Don't mind, they didn't put the first 0, but this means 0.02. So if you multiply that, you have $230. That is your required margin. So to calculate used margin, is what you do. Required margin is equal to used margin. Okay, let's go straight to step 4 to calculate equity now, because you already have an open position. So let's look. So this is more like an overview of what we have been looking at practically. So let's assume price has moved slightly in your favor and your position is now trading at break even. So what it means is your floating P or L will be 0 because it's moving in your favor. Okay, equity is equals to balance plus floating, whether there's profit or there's loss. So if there's profit, equity increases. If there's no profit, maybe there's loss, equity reduces. So take note of that. Equity is only the same thing as balance when you don't have any open position. So you can see margin is 230 based on that calculation that we did. Equity is this, balance is this, because this is required margin. So there's no open position yet. We just did that calculation for $1,000. So let's look at how to calculate free margin. These things are things we've already discussed. It's just like an overview. Now, to calculate free margin, you take out the equity from the used margin, which you just calculated already, which is also the same thing as required margin. So just take out 1,000 from 230. You have 770. That's free margin on that amount for that currency for that time. So let's look at margin level. So what is the margin level? for that amount, for that margin requirement, for that position. So to calculate the margin level, what you need is equity divided by the used margin. Remember, equity is 1000, used margin is 230, so multiply it by 100%. So margin level is calculated in percentage. When you do that, you have 435%. So that should be your margin level for that particular amount, for that position, for that entry. So to fill up these tabular forms, you can now put all those things there. Position is long, pair is Euro USD, position size is 10,000 units, entry price is this, so this is what Euro was selling at that. Current price is the same, margin level is 435%, we already calculated. Equity is 1000, used margin is $230, free margin is $1000, free margin for $1000 is 770, balance is this and this. So this is what it will appear like, or rather this is a calculation done on $1000. So you can repeat this kind of calculation for $500, $100, $1000, $10,000, or what have you, depending on what you want to calculate. So now this is the calculation done on loss. So if the market goes few pips against you, let's say 500 pips, of course 1 pip is $1, right? Your margin level will be this. So your margin level was higher because we calculated if the trade moves in your favor. So if it moves against you, so this is this. Now you will notice use margin has changed because of the loss. So, and then you can do a new calculation for loss. Remember, €1 is equals to 110 for dollar. If you do the conversion, you have $11,000 for 10,000 euro. That means notional value is 11,000. So it's just the calculation from the euro to the USD, since USD is the base currency, that helps you calculate the notional value. So it says notional value has fallen because we now have 11,000. So it just simply means that euro has weakened. Remember, what we calculated for the other one was not 1.10, we calculated 1.15. So that's the difference. So now, previously the required margin was this for trading this. Use margins updated to reflect changes in required margin for every position that is opened. So let's look at floating or P&L now. That's what we're calculating. So quickly, euro fell from this to this with a difference of this. So the other one we calculated was increase. So that's the reason why when we did the conversion, $1 was equal 1.15 euro. But now euro has fallen by 500 pips. So by falling by 500 pips, we now have euro as 1.1000. Okay, so if you have it in that way, that's why we have 1.10 for euro when we're calculating for notional value. So this means that you have a floating loss of $500. That's what it means. It's simple. 500 pips downward, $1 per pip is $500. So now let's just do the calculation quickly with the math. Current price minus entry price, which is these two, multiplied by the 10,000 units for open position for one lot. Then multiply by 1 dollar divided by the number of pips. That's what will give you the floating or PNL. That's negative $500. So you can see it's still, it's this whole math. So okay, they just want to make money. Okay, they just want to make money. But for me, like I always say, I believe that trading and profitability in trading can be measured by your development. That's how you can measure it. It can be measured by your development. So what's your level of development? Very important. What's your level of development? So that's what will determine how you would do with trading. So there's this thing that happens to your brain. The more you are into trading, the more your brain develops. I always say this. So that's why you notice that people who just joined may not get profitable immediately, but those who have spent maybe 3 months can get better than those who just joined, like the newbies that are still blowing up accounts. Then you now have the stage of those that have done 6 months, and they have learned a little bit of challenges. Now there's a common language. Oh, I blew my account, but I've learned from my mistakes. The thing is, you will blow again, and when you blow again, you say you've learned from your mistake. Then you will blow again, and when you blow again, you say that's the development process. So, but this is where a mentor comes in. A mentor tells you, don't use this lot size, don't do this, apply risk management. See, if you think you will outsmart the market, you are joking. You are joking. You want to outsmart algorithm? It's not possible. So that's why this course on margin is very, very important. So what we're going to do is we're going to look at trading scenario, margin call level at 100% and stop out level at 50% tomorrow. So we're going to continue from here. Wait, this was what we looked at today. Why did it go back? Let me see. I think this is 50%. Let me see again. Okay, we're looking at different trading scenarios. So the first one was 100%. The second one, which we'll be looking tomorrow, is 50%. Then tomorrow, then the next one is what happens if you trade with just $100. What you should be expecting. That will be, we can take that to tomorrow if we are fast. We can take that to tomorrow as we round up. Then after tomorrow, we'll enter into crypto. I'll take you into the crypto app and show you a little bit of how you can trade on crypto and how you can trade on sports. I'll show you spot trading, futures trading, and all. So that's the basic. I think the crypto course is easier. It's not as complicated as the Forex course. But once you have the understanding of the Forex, it makes the crypto easier. So let's stop here for today. We'll continue here tomorrow for Forex, for the course, sorry. So back to the chart, knowing that we're going to be trading this week. Most of us here are traders already. So, and we have expectations. Some of the things I just taught you now on margin will not help you on chart. So that's why I want to talk on charts first before we go. Now, like I always say, you must have a strategy that gives you the edge first in the market. And then you cannot win every entry. So that's where risk management comes in. So as you trade this week, take notes. Especially, I'm talking to people that subscribe to my VIP. So you subscribe to my VIP, it will be bad that I'm mentoring you and then you are losing money. So what essence is then your subscription to my VIP? You shouldn't be losing money. So what I'm going to give you now is your risk management should be calculated by 1%, only 1% of your capital should be traded every entry, any day. So if you are taking 2 entries in a day, so take note that except you divide the risk on the entry maybe into 2, if you're going to take 2 entries, most likely I'll be giving 2 principles that will help you make the money. Part of the principles is what I'm saying now. Don't trade more than 1% of your capital in a particular day. So if you are going to take 2 entries, like I said, okay, I'm going to be giving 2 entries. Why am I giving 2 entries? There are 2 sessions I trade, London and New York. Why am I trading in London and New York? Because of the pair. So I'm trading Euro USD. Euro is for it can work for both London and New York. Though the people that use Euro mostly are I think the Germans use Euro mostly, but they still transact Euro in London, you see, and they also transact Euro in America. So that's why the New York session can affect the Euro currency, and then the London section can affect the Euro currency. And then the other one, which is GBP, that one is the Great Britain pounds against the dollars. So that particular one is traded, is used mostly by those in London. So you can actually trade GPUSD during the London session, which starts 7 a.m. in the morning and closes 10:30 a.m. and then you can also trade it 2 p.m. or 2:30 p.m. New York session, which closes 5 p.m. in the evening. So I don't want us taking trades between 10:30 to 2. I don't want, except in special cases or special occasions for these 2 pairs, GPUSD and Euro USD. Now, special cases in the sense that there's a high impact news that moved the currency, and I'm seeing an imbalance or a retracement that may occur before New York. I'll give update immediately, so you can see how easy trading is. So I give update on the group so that you know that, okay, yes, we're going to take this trade now. But gold can be traded whether in New York or outside New York or outside London. So gold entry may come in between, but GPUSD and Euro USD must come during London. And why am I saying must? Because that's when we will get the move. That's when you are taking the entry is moving, because that currency is traded at that particular time. So pay attention to that. That's why I said that before, in case you're wondering why I said it. So pay attention to that. And so that means you should work with these timings. It will help you to achieve something. So since we are trading New York and London, so that means we can be having 2 entries, except there's no buyers in the first one, so we'll have 1 entry. So if we're taking 2 entries in a day, automatically what you can do is you can divide your 1% risk into 2. So let's say you are trading $100, for instance. 1% of $100 is 10% is $10, 1% is $1. So you can divide that 1% risk into 2, which is 0.5 cents. So you are risking 0.5 cents for London, 0.5 cents for New York. That's how it's actually supposed to be. But this is what many traders don't know. They want to make it immediately, so they are risking 10%, they are risking 50%, and then the account is not growing, rather it keeps reducing and depreciating, and you're wondering what's going on, and then you blow it. It's because of this risk management that I'm talking to you about now. So when you are taking trades from tomorrow with my signals and with my coaching, make sure you are risking only 1%, because we will not win every trade. So what's going to happen is that tomorrow we're definitely going to take about, let me say, last week we took 8 entries for GBUSD. I mean 8 for Euro, 9 for GPUSD, think about 7 for gold. So let's say we take 8 trades on GPUSD. We may win 6 trades and lose 2. Now I can't tell you the one that will be loss, and I can't tell you the one that is profit because I'm not the market. As if I have any confirmation that it's probably an A setup, I may most likely say, okay, this is an A setup. But if I don't have any of such, it's not worth the risk. Mark my words. Because if you risk more than you can risk, then there's going to be trouble. There's going to be trouble. I just want to confirm if that last video was downloaded. Alright, so it was downloaded. So if we are taking 8 entries and 6 is profit, 2 are losses, 6 are profits, 2 are losses, what it simply means is if 3 for a peradventure hits take profit, and we're getting maybe 80 pips, no sorry 120 pips on these 3, and the remaining 3 is break even. So let's say we have 60 pips for break even. If 2 hits our stop loss, we should lose only 40 pips. So 180, which is the gain pips, minus 40 pips will give us 140 pips. So we should gain for 140 pips on GPUSD, and then it should be the same winning rate for Euro USD. It should be the same winning rate for gold. That's what it should be. So if we can get it this way, then we can be profitable this new week. Then if you can risk just 1% of your account and target 2%, then you'll be profitable. If you risk 1% of your account and you are closing your trade at 1% profit, you will not be profitable. You'll be manipulated. But if you risk 1% of your trade and you target 2% and you take profit only 2 times or only 3 times, you'll be profitable. So mark my words. So what is our edge on our strategy? I told one of my mentees that my edge is liquidity. These things are liquidities. All these things you're saying. So this is DXY, the final confirmation for entry for GPUSD and Euro USD. Why is this a final confirmation? I have somebody in the free channel one day that I posted DXY asking me if she can trade it. We are not trading DXY. DXY is the dollar index. We're not trading it. We only use it to confirm the move, because anytime DXY is bearish, Euro USD is bullish, GPUSD is bullish. So now, but the thing is, Euro might not go bullish immediately, GBP might not go immediately. So don't think it's automatic that if GBP is bullish, Euro will be bullish. No, it's not. It's not like that. But anytime DXY is bearish, Euro, because DXY is the base currency for these 2 pairs. So that helps us to easily win entries, because DXY gives us confirmation. So take for instance, you see this long move during NFP on Friday. If I show you GPUSD, you understand what I mean. So DXY went bearish, right? Now look at GPUSD, it went bullish. So you can see, so they are opposite to each other. So that's why we study the DXY as well. If you look at Euro you see it's massive. Now you can see that euro is more bullish than GP, so you can see that there's a difference. So that means what may most likely happen tomorrow is that GP will go bullish, euro may not go bullish long again. If you look at the analysis video, now I told you go to the website to see the analysis video, but you need to get registered to have access to it. But it's free, you won't pay anything for it. Now, so if you look at GBP USD, you see that GBP USD has not yet bought as much as euro. But euro has gone already, is at the edge of liquidity. So what will happen is that GBP USD may come here. So while euro is doing that small buy, responding to DXY, GP will be doing massive buy to this point. Now, massive buy to this point does not mean you're going to enter one entry and be expecting one magic to happen. No, don't do that. The highest you can target, that's why as a day trader we tell you to use 15 minutes entry. We're only telling you the bias, the direction. The bias is not the entry. The bias is the direction, directional movement. But what you need to know is that there are zigzag movements before price gets here, of which it can take you out, hit your take profit before it gets here. So that's why what you should do is when you have mapped out liquidities, like look at these two liquidities now, right? You go down to your entry time frame and then you're looking for the entry. So your entry should be in between these two liquidities. So this is what you are supposed to trade. So when price takes out this liquidity, you trade the difference upward. So that's how it's done. So that's our edge. That's why we win the entries we win. That's why we get the entries we get. That's why we do what we do. So we're able to map out those liquidities, and those liquidities are as a result of smart money. So in case you're wondering, how do you know these liquidities? It's simple. This one is order block. This one is breaker block. This one is breaker block. Then this one is, see, this one is mitigation block. Okay, no, this is still breaker block. This is mitigation block. So take note of that. These are blocks. So you're wondering, how do I know them? Because of brain development. I'm already used to them already. So when I just look at the chart, I just know them, I recognize them. So that's how it will be for you with time as we keep doing the mentorship. So there will be a time when I will teach you how I get to know them. But until then, you will need to look at the videos. So watch the videos on SMC. Watch the videos on ICT. Read the books, the ebooks. That's how I got to know it. So after you've read it, you might not all fully grasp it, because I read and didn't grasp immediately. You need to keep on practicing and then keep on going through the mentorship. Your brain will be developing in a process of time, and soon you will get used to it and you will master it. So once those liquidities are spotted out, what I target is one liquidity point to the other liquidity point. Now, I told one of my mentees that there's such a thing as SMC trap. So what happens is that in the world we have a lot of SMC traders, such that SMC traders now are now liquidity. So that's why I don't just focus on taking this order block as an entry. For some SMC traders, once price enters that order block, they want to take entry. If you do that, you'll be on the SMC trap. Don't do that. Don't be in a hurry. Hold on until price enters. That's why I say I'm using liquidities now. I'm using blocks. I used to use lines. I had to stop it because the line is where the SMC traps are entering. So just in case, let me show you what I mean. Let me go back to the 4-hour. If peradventure I came here and put this line and say, okay, this is where the order block started, right? Or I say, okay, so if I say that's where the order block started, or I put it here, now you cannot even mark block with line, so I can't really do that. So let me just forget about that. I want to show you, if you use line, what line will be showing you when you come down to this time frame is line will just be showing you a line. So but this is what helps us to avoid the SMC trap. When price begins to play inside your block, watch out for the structures that are formed in the 15 minutes time frame. As soon as you find the bullish structure formed fully in your block, that's when you go bullish. If you don't do it that way, you will be induced many times. I used to be induced many times until when I got to know that. To be induced many times until when I learned what I just told you. We have 14 minutes to close this class. So until I learned it, my inducement reduced. Now I still get induced because you cannot win every trade, no matter how good you are. Just have your edge. So it is this edge that makes me have 6 winning trades and 2 losing trades, which is good winning rate. Do you understand? So what you should focus on is having a good winning rate. If it's 100% winning rate you are looking for, you will never get it. No professional can win, because the thing is, you are dealing with algorithm and you're dealing with brokers with manipulations. So trading is about being able to be smart, to come in and take your own chunk from the market. So it is that edge that I have that makes me know I will take this with this risk, I will take this with this risk. So by the time I sum up the winnings with the risk calculated will give me the profit. So it's not like there will be no losses in sum. So then, remember I told you, if you want to trade gold, so this is on GBUSD. Remember I told you, if you want to trade gold, make sure your account is big. If your account is not big and you want to trade gold, you have to reduce the lot size. In fact, if I'm trading 5k account on gold, I usually use 5k account. I usually use 0.05. That's what I use, 5k. If it hits stop loss, the loss is 50. If it hits takes profit, the profit is 100. But I see people trading 100 and they are using the same 0.05. What do you think will happen? They're gonna still lose the same 50. So the guy is using $100, he uses 0.05 on gold, and his money he has lost 50% of his money. He's wondering what happened. That's why it's important that you use your position calculator first before you take the trade. So if you go on our website, that's kfctrading.com, go straight to lot size calculation. Just go straight to lot size calculation. It will take you straight to baby pips lot size calculation. So once you click on lot size calculation, it's even written there, calculate the right lot size to use before you trade. Click on the entering button. It will take you straight to the calculator. When you come to the calculator, put the capital you are risking first. So let's say you are risking $100, for instance, and okay, what are you risking? 1%. I mean stop loss, we use 20 pips for now. What's pair? Okay, this is sorry, baby pips cannot do gold. Take note of that. I will put on our website, we will put the calculator for gold. After this class, I will see how our engineers and technicians will put gold on the website. So until then, let me just use euro to show you what I mean. So if you calculate this, you see that euro is giving you 0.05, standard 0.005. So this is the standard 0.005 for euro. And if you do that, you'll be losing $1 if you hit stop loss 20 pips. If you hit takes profit, you get $2. That's the right way to do this. So if you win 6 trades, you have $12 for one day. If you lose 2, which is 1 you have 10. So if you repeat that for 5 days, maybe you maintain 10 8 10 8, at the end of the week you have 50, or you have 40, or you have 30. That's how to be profitable. That's how to be profitable. So I'm going to put the gold calculator and show you what I mean. So reduce the risk on gold. So if you are trading little money on gold, you only use 0.01, and that 0.01, the risk is high. Most brokers don't accept 0.001. Otherwise, the least you can use is 0.01. Then you should reduce your stop loss, or watch out for when price is changing character against to your stop loss, then exit the trade. So you must be on your phone to exit it. So not that you will not put the stop loss, you put it, but once you see change of character going to your stop loss, you exit the trade. So in case you don't know how to confirm change of character, we may look at that in next class. But I've taught that many times. You can see it in my videos, but I can teach it again so that you can get it perfectly. So that's what you should do on gold. Don't take the stop loss. If you are using 0.01 and you are trading $100, $200, don't take the stop loss. Your money will keep on reducing. Exit it once you see change of character. Don't let emotions make you feel, oh, I'm losing. Or exit it, lose that money, then get another entry. Then take note, anytime you lose an entry, don't blame anybody for the loss. Blame yourself for your loss and say, yes, I was wrong. That's how you can go again and you can win, and that's how you can get better. But when you lose and you're looking for people you will blame, or where you can put the blames on, you will not get better. Okay, so I want to close the class now so that we can continue tomorrow. This one is fast spent already, so this is like the longest class we've had since we started this course, this particular 2.0 course. So is there anyone you have a question you would like to ask? Could you just drop a message, let me know. We have 6 more minutes to exit this class. If you don't have a question, I can just say a few things before I close the class. I see someone raising up his hand. We have 6 minutes, so what I will need you to do is to be fast, so you can unmute and speak.
Yes, sir. Good evening, sir. Thank you for the opportunity. My question is, what's the recommended percentage? I'm having a 10,000. 10,000 that account. What's the recommended percentage? Like the risk for my 10,000. Is the $100 okay?
I already said 1%. I already said 1%, so it's 1% that is your recommended.
Maybe I should reduce it to $50.
Your network is breaking. I don't know if it's my own. I don't know if it's my network that is breaking. So I said I already said 1%. We just have few minutes for this class to close. I think I've already said that on that. I said 1%. So I can't be saying for $10,000 is this, for $20,000 is this. That will be taking a lot of time. I already said 1%. So it's left for you to go and calculate what is the 1% of $10,000. That's what you should risk in each trade. 1%. Now, because the money is big.
I've already calculated.
Okay, you've already calculated it.
$100.
So that is what you are supposed to risk now for each entry. But the thing is, if you're risking 100, if you're going to hit take profit, you should make 200, because now that amount is big. So because that amount is big, you will think the loss is big. The loss is not big. The loss is not big. That is what you are supposed to lose for $10,000 account. For 100,000 is 1,000. for 100,000 is 1,000. So just note it that the bigger the account, the bigger the loss and the bigger the risk. So if you try to say, oh, it's too big, let me reduce it, you will not make money. You will not win that prop account. You will not. So risk that 1%. Any other question? We have just 4 minutes. So the question came from Alex on that. I didn't think Alex would be asking that question because I've taught him this part many times. But I think the reason